Hi folks, I'm Phil Newton, developer of Trading Strategies, which provides real-time training and education. This video shows some highlights from my live training sessions. Hi folks, welcome back. We're looking at the 15th of September. This is the end of the day. I've not done a morning video for today, but basically what this short video is going to be about is when basically to stay out the market. Now, my main objective for the day is to capture an average day's move. That's ultimately what my goal is, right, for intraday trading. So how can I know when it's done the main move of the day? How do I know that? Well, I primarily focus on the daily 100 periods average true range. That will show me over the last 100 days what an average day's move looks like. For example, on the pound dollar, we're on the pound dollar at the moment. So an average day's move at the moment, I've got calculated at approximately 170 points. So I know that on average, at the moment, based on the last 100 days, that the pound against the dollar does 170 points. So long story short, folks, is that if an average day's move is done, then the main move of the day, on average, has been done. So there isn't really a great deal of trading opportunity from a potential point of view. So what I'm trying to assess by looking at an average day's move is the potential for the coming day. Is there potential for this currency pair to move, or any currency pair to move? And that's based on a daily average true range based on 100 period setting, so 100 daily bars with an average true range indicator. That for me tells me what on average it does. So what I've got here is just two lines. The distance between them is 170 points. So basically I can just drag this on, put that on the high. The high of the day, it'll project a downside movement. If I place the bottom line on the low of the day, that will give me an upside projection. So what I can see coming into the time on the charts, I think you can just see it on the edge of the screen there. The time is 10 o'clock on that particular bar. So even at 10 o'clock, so coming into the UK trading session, I can see straight away that an average day's move has been done. So that means that I've got severely reduced, if not zero, potential trade. Now usually I use a cut-off figure of about 65-70% of an average day's move. So if 65-70% of an average day's move has been done, let's just call it 70. So 70% of an average day's move is done. The main body of the day has been done already. So my profit potential would be 30%. So 30% of an average day's move is left. That's my potential for the day's trading. That's not a great deal of profit potential. Personally, I'll let that go and wait for a better trading opportunity because the main body of the day has already been done. So day like today, average day's move has been done. It's been done, to be fair, on most of the currency pairs. And what we can see is we can actually see that 2 times an average day's move was actually done today. So there's not a great deal of profit potential. There are other entry methods and trading methods that you can look at, but generally speaking, if an average day's move is done, it ain't going to do much more. And again, we can just look back across the charts and let's just use our yardstick. When an average day's move is done, these solid red lines are the current day's highs and lows. So when an average day's move has been done, if I just put this on the low of this particular day here, you can see average day's move's done, it normally stops. If I just put it on that day there, it just goes beyond an average day's move. Average day's move done, stops. Just put it on this day here, average day's move done, it stops. Now in this case, average day's move was done and we saw an exponential movement. Now there was an alternative entry method that we looked at in my live trading room, and we did actually manage to capture that main body of the move there. That was actually quite a decent move. But then again, there are alternative entry methods that you can use. But again, generally speaking, when an average day's move is done, it stops. Let's just go back along the chart slightly. Look at this day here. Average day's move done, just exceeded, as you can see there. Average day's move done, price stops. A little bit more than an average day's move on this day here. So it actually did an average day's move, stopped for a couple of hours, and then it did a little bit more. The expectation is quite low. So you've got 1, 2, 3, 4 days out of 1, 2, 3, 4, 5, 6, 7, 8 days. So it's about 50-50 at the moment. Now, to be fair, these are unusual price movements. Let's just go back along the chart. Let's just go back along the chart and just see what happens. Average days move done. Price stops. Average days move done. Price stops. Average days move done. Price stops. You can see where this is going, folks. Not quite an average days move, but again into that 65% zone. Average days move done. Stops. Average days move done. Again, in this case, just exceeded slightly. Average days move done. Stops. Average days move done. Stops, and to be fair, it kind of messes you around for the rest of the day. So again, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Another 10 days. So out of, just go back and do 20. Let's just go back and do 2 more. So out of 20 days, let's just go back and do a few more. Again, you see the idea, folks. Again, average days move done to the upside there. Average days move done. Stops. Average days move done. On that day, just exceeded. Stops. So out of 20 days, we saw 4 that exceeded more than an average day's move. Now again, if you do this exercise and you go back along the charts, those couple of times where it doesn't exceed an average day's move, you might get lucky, you might get some really decent trading opportunities that might give you some exceptional price movements. But look back and see what it does on average. An average is simply that, it's an average. We can see more than an average day's move, we can see less than an average day's move. It's never always going to stop and start and do an average day's move. The markets aren't perfect, but on average, an average day's move is done, price usually stops, certainly in the short term. So consider it a stay out indicator. When an average day's move is done, even if you might have an overnight trading range breakout, for example, and you've captured the main body of the day, average day's move's done, stop trading, walk away, leave that pair alone. It's a good indication of when to stay out. When the market expectation has been done, the movement for this particular currency pair, when the average day's move is done, typically when that's achieved, the market stops. And we've only looked at 20 days, but again, if you do this exercise on your own, look back across the charts, have a look at an average day's move based on the daily 100 period average true range indicator, you will soon see for yourself that when an average day's move has been done, or to be fair, when we get into the realms of 65-70% of an average day's move, when we get into those realms, chances are it's not going to do much more. We're looking for alternative setups. There's certainly going to be no breakout setups. And you're looking for price to retrace more significantly. Usually it's fib retracement setups is what I'll be looking for. So I'll be looking for that profit opportunity to come back to me. For example, just on this day, average day's move gets done. You're looking for price to retrace significantly to at least 50 or 60, or I would be looking for it to retrace at least 50 or 61% retracement. You're looking to recapture your profit potential. So based on an average day's move, generally speaking, and more often than not, when an average day's move is done, just step aside, just walk away, leave that currency cross rate alone. And day like today, when, to be fair, you know, the average day's moves have been done on most currency cross rates, just turn the computer off, walk away, go do something else, spend some time with the family, and just enjoy yourself. You know, don't worry about what the market does or does not do. Yeah, it's done 2 times an average day's move today, and there are other things that you can look for. But at the same time, how often does it happen? Does it do it on a regular enough basis for you to capture those moves that do exceed an average day's move? Look back on the chart. It doesn't happen too often. Certainly not for me, not enough to make it a regular trading occurrence. That's it, folks. Average day's move, when it's done, just leave that cross rate alone. Wait for price to retrace significantly enough to give you that profit potential. That's what it's all about. Is there potential for the day? Have a look at the average day's moves. You'll soon see it for yourself, folks.